Warband. Another day in the arena. This is Sunday, June 14th, 2026. The markets of men are dark this weekend, but the time chain never sleeps, and neither do we. The sharpest signal this morning is not in the price. It is in what the smartest capital on the street is doing with it. Listen, as of 6:30 Eastern, Bitcoin trades at 64,600, up better than 1% on the day, firming quietly through the weekend after the worst stretch of the year. Hold it in perspective. That is roughly half of the record, near 126,000 it printed late last year, and it sits just above the line near 61,000 it tagged on Friday, consolidating, not collapsing. Ethereum rides beside it at 1,680, Solana at $68, both green. But read what is happening beneath the majors, because it tells you where the fear lives and where the conviction hides. Bitcoin's share of the entire crypto market has climbed back near 58%. The altcoin season gauge sits at 46 out of 100. Firmly Bitcoin season, not alt season. Ethereum is down better than a third from its highs of the year, and the small and the speculative have bled 50% and worse. When the tide goes out, the capital does not leave the ocean. It runs to the deepest, hardest water it can find. In a drawdown, the float concentrates in the most fixed supply asset on the board. That is not weakness, that is selection. And Friday delivered the moment this warband has built toward for 6 straight mornings. SpaceX crossed the tape at last, the largest public offering in the history of markets. After 24 years, sealed as a private fortress, Musk's rocket house rang the bell on the Nasdaq, raising $75 billion at an implied worth near $1.75 trillion. The bankers fixed the offering at 135. The market refused the number. The first public trade printed at 150, 11% above the line, then tore better than 30% higher before settling to close near 161, up better than 19 on the day. Hear what that gap is. Demand so deep, the underwriters could not hold their own price for a single minute of open trading. For 6 mornings, we said orbital scarcity would not list quietly. It did not, and the debut matched the thesis to the decimal. Now to the story that should reframe how the warband sees this entire moment. This past week, Cathie Wood, the disruptive innovation chief at ARK, climbed into an unsupervised Tesla robotaxi on the public streets of Austin. No safety driver, no hands on the wheel. And midway through the ride, the car earned itself a $75 parking ticket. Wood did not flinch. She turned to Musk in public and asked the only question that matters at fleet scale. How do you handle the tickets, the violations, the friction of the physical world? And then she answered it herself by adding parking tickets as a line item in ARK's Tesla model. Smoother than every robotaxi ride she had taken before, she said. Tesla wins this race. Hear why that small, almost comic detail is the whole thesis in miniature. For 3 years, the street priced artificial intelligence as an abundant story. Cheap code, cheap content, collapsing modes, software eating everything for free. Jordi Visser at 22V has been carving the opposite into the record. The real AI story is not intelligence. It is embodiment. The moment the machine stops living in a chat window and starts driving a car, walking a factory floor, pulling power off a grid, that is the moment it stops being abundance and becomes scarcity, because embodiment runs on things you cannot print: electricity, copper, compute, land, and a $75 parking ticket is exactly what it looks like when the abstraction finally touches asphalt. And here is the second-order cut for the hardest money. Visser does not read Bitcoin's 30% drawdown as the thesis breaking. He reads it as capital rotating toward asymmetric ground, while the embodiment trade gets built, not deterioration, but repositioning. The strong hand does not dump the scarcest asset on earth because the abundance crowd lost its nerve. It accumulates while they do. Lift your eyes to Wednesday because the week bends toward one room. The Federal Reserve meets, and for the first time, Kevin Warsh sits at the head of the table, his first meeting as chairman. The rate decision itself is theater. The futures price it all but certain that nothing moves. The benchmark held near 3.5%. The event is not the decision. It is the man and the words. Two things make this the highest signal hour of the week. First, the reports that Warsh may scrap or gut the dot plot. The quarterly projection ritual the entire street genuflects to at his very first meeting. Strip that ritual away, and what is the institution underneath? A room of people voting on the price of money, dressed in the costume of science. Barbarism is the natural state of mankind. Civilization is unnatural. It is a whim of circumstance, and barbarism must always ultimately triumph. The hardest money on earth needs no vote, no projection, no blessing from that room. Its monetary policy was written once, in code and sealed forever at 21 million. Second, and sharper still, Warsh has said in the open that artificial intelligence is structurally disinflationary, the most productivity-enhancing wave of our lifetimes. A chairman who believes that may let inflation run hot, so long as productivity is the cause. Cathie Wood is already there, calling for cuts as AI breaks prices lower. So watch the press conference, not the headline. If Warsh signals he will let the AI boom run, the abundance assets cheer for a night. But the asset built for exactly this regime was never waiting on his permission. One more current, and it is the one the Warband pays to see. When Friday's bell rang, the InvestAnswers engine did not just mark silver and the chips. It lit up the layer almost no one watches, the power and the iron that physical AI actually burns. Eaton and Bloom Energy both fired mean reversion oversold, stretched hard to the downside, the zone where strong hands feed. Fluence, the storage name, flipped trend positive. And Freeport, copper itself, the metal in every wire of the buildout, turned trend bullish beside it. Read it as one sentence because the operators are writing the same one. Eaton is bolting 500 megawatt power plants onto the side of data centers. Bloom just signed to drop nearly 3 gigawatts of fuel cells into the AI build because the hyperscalers are giving up on the grid and generating their own. NVIDIA's deployment pipeline now counts the coming wave in tens of gigawatts. The bottleneck was never the idea, and it was never even the chip. It is the watt and the wire. And those, like the coins, cannot be conjured by decree. So here is the frame. Warband. The smartest capital on the street is no longer arguing whether AI is real. It is climbing into the car, paying the parking ticket, and pricing the power. The trade has moved off the screen and onto the asphalt and the grid, and every road on that map ends at the things that cannot be printed. Watch Monday's retail read. Watch Warsh on Wednesday. But do not trade his verdict. Accumulate the scarce and let the soft hands learn the lesson late. This is Warband as a service. Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Read the runes before the crowd does.